program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Thanks for joining us here at Auspice. Let's check what happened overnight. Global equity markets coming under some selling pressure, with investors opting for caution amid political upheaval in France, Japan, and as the US US government shutdown shows no sign of ending. Now, stocks on Wall Street closed lower, particularly in the absence of economic data, and as a consumer expectations survey from the New York Fed showed deteriorating future expectations and rising inflation projections. Stocks, specifically Tesla shares, extended their losses after the EV maker unveiled its low-cost Model Y, priced just below $40,000. The starting price around 11% cheaper than its base model. Dell nearly doubling its annual profit forecast target there for the next 4 years, betting on strong demand for its servers that power AI workloads for customers such as Elon Musk's AI startup xAI and CoreWeave. A report that Oracle's profit margin in its cloud computing business may not be as strong as expected saw the company stock fall. AMD advanced after Jefferies upgraded the stock rating to a buy as the chipmakers' deal with OpenAI bolstered the tech rally. Australian-based Bitcoin miner Iron fell after it announced a planned $875 million convertible bond sale. Corona beer maker Constellation Brands gaining after posting a smaller than expected drop in second quarter sales. IBM rose after the company announced a partnership with AI startup Anthropic. US-listed shares of Trilogy Metals soared after the White House said it would take a 10% stake in the company. AppLovin, that stock was on the move, recouping nearly half of its losses from the prior session, following news of a US Securities and Exchange Commission probe into its data collection practices. And US-listed shares of James Hardie soaring after the building materials company reported preliminary second quarter net sales ahead of analyst estimates. Well, Americans grew more worried about the future of the jobs market last month, according to a report from the Federal Reserve Bank of New York. It also revealed that consumer expectations of inflation a year from now has risen to 3.4% from 3.2%, while 3 year ahead expectations for inflation has held steady at 3%. Meanwhile, Federal Reserve Governor Stephen Miron has said the bond market's current relative calm supports a push for lower interest rates, saying I would actually argue the bond market behaviour last year bore out my argument, and this year, thus far, it's again supporting my argument for a swift pace of easing. Well, US yields declined in a sign of improving demand, with investors also snapping up 3-year notes at an auction. The 2-year Treasury yield falling to 3.56%, the 10-year at 4.11%. The US dollar index up close to 0.5% on the day, the Aussie having fallen back to 65.8. Oil prices have steadied as investors weighed a smaller than expected increase of OPEC plus output in November against signs of a potential supply glut. Brent crude futures at $65 a barrel. The copper price surged 4% overnight, while iron ore unchanged at $103 a tonne, and US gold futures eclipsing $4,000 an ounce for the first time, driven by expectations of a rate cut later this month and safe haven demand. Spot gold currently around $3,985 an ounce, and Bitcoin has fallen back to $122,000. Okay, let's get across what we're seeing, particularly with a focus on US markets. Peter Cardillo joining us from Spartan Capital. Peter, welcome back to you. Let's start with equities and remain at those near record highs there. It's all about this momentum. Are you seeing anything that could possibly shift that at the moment?
No, for the moment, I'm not. In a few days, we'll begin with the earnings parade. And most likely, I would say most of the companies, if not 95 or 97%, are likely to meet market expectations, even though the bar has been lowered. So I think the earnings will be a supporting factor. And then there's another factor, there are a lot of people, including myself, who are saying that valuations are high. And of course, in certain areas, there might be a bubble developing, and I think the more, the greater the core is, the more the fact will probably be that nothing is going to happen now. For many years of experience on Wall Street, I've seen this many of times before. We go back in the 90s, when Greenspan, warned that the markets were irrational exuberance and that they were very high. And what happened? Nothing happened. About a year later is when they pulled the plug, and of course we all know what happened. Recently, Fed Chairman Powell said the same thing. But there are many economists, including myself and others, that are saying the market is high, perhaps there's a bubble, and yet the market continues to rally. So from experience, I think we're probably not going to see any serious downturn just yet. Can we get a couple of days of a pullback? Absolutely. Can this market give back 5 to 6%? Maybe within the next couple of weeks? Absolutely.
Meanwhile, the government shutdown showing no signs of ending at this point. How do you gauge the market response to that and the prospects, perhaps, that this could be protracted?
Well, this is not the first time that we had a market shutdown, and the markets always seem to shrug it off because sooner or later there will be an accord. In fact, President Trump invited the Democrats. He opened the door, and I just think it's a matter of time. Look, both parties are playing hardliners at this point. The Democrats are holding off. The Republicans are holding off. But at one point, it becomes a real political risk, and neither party wants to take that risk. So I just think may not happen this week, might not happen the next week, but I think the week after that, we'll have some accord.
Now, Peter, given the shutdown, that has certainly continued to bolster gold, also on the prospects of further rate cuts to come. How would you describe the movement we're seeing in gold at the moment?
Well, as you know, I've been a gold bug all my life, and I've always said that in every portfolio there should be at least a minimum of 10% of gold holdings. And it took many years for gold to really show its might, to really show that it's a true store of a true haven store of value. And in the past year and a half, it finally showed that. And now we have to ask ourselves, why? Why? Because never have we seen such big demand being manifested by the central banks. And now, with all the uncertainties that we face, a high stock market, probably interest rates cuts ahead, soaring deficits, and we haven't heard this now for about a month or so, but the Supreme Court has yet to rule on whether or not if most of the Trump's tariffs are legal or not. And if the Supreme Court should side with the law, then I think you're going to see gold accelerate to 5,000 by year end, because that would mean certainly a disruption of the present administration's economic goals and policies, and that would mean that the Treasury would probably have to pay back billions of dollars. And so what would happen to the deficit? Remember now that the deficit has come down. Why has it come down? Because of the tariffs, because of our imports exploding. Our exports exploding, and imports falling off a cliff. So if that's reversed, that means you're going to see deficits soar, and that just means gold will continue to rally.
Is that likely to happen with the silver, or do you it's approached its top there?
No, I think, my short-term target, by the way, for gold is 41.50, and that is the short-term, intermediate term. And for silver, $50. No, silver will probably follow, but silver over the past day or two seems to have hit a roadblock just under this 48.50 level, and I think that's more technical than fundamental at this point. So I think it needs a little bit work to be done, but I think that resistance will be taken out and will probably surpass $50 very shortly.
Peter, great to get across what you are seeing on markets. Thanks for joining us at Spartan Capital.
Thank you for having me.
So let's look at where we're likely to open. According to SPI Futures there, it's going to be flat, down just 1 point. We did see that negative lead in, of course, from Wall Street. Not a lot of local news to go on, but we'll get across those developing trends on the local market in just a moment. Stay with us.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.